Hi, and in this video I'm going to talk about whether it is possible to own the world through one single ETF. So that ETF that we're going to talk about today is the FTSE All-World UCITS ETF, VWRL. So this is a Vanguard ETF, and what we will do over the next few minutes is take you through sort of an introduction to VWRL, sort of a bit of an overview of how much it costs, where you can buy it, what makes it up, and what is that sort of global diversification that you get through the purchasing of this single ETF. So if we are looking at coming in through Vanguard, you can come and have a look on here. What we do is what we offer and then go down, because we know it's an ETF, we can go in there and just have a quick look. What we want to look at is this one, the FTSE All-World UCITS ETF. So let's go and have a quick look at the full fund details. So what you get is a very quick overview on this page, and what we're going to do is just tell you what is on here. So first of all, we have the current market price, and as I say current market price, it's actually yesterday's price. They tend to update this once a day. If you wanted to buy one single stock of VWRL, you would be looking to pay £83.28. Number of stocks within the ETF, 3,762 stocks. What's really important to have a look at, as I've said in previous videos, which you can have a look at, linked down below or on the card on the screen, is the ongoing charge. You want to keep this down as low as possible, and this is a relatively low cost at 0.22%. And then looking at the risk side of things on this ETF, on that scale of 1 to 7, with bonds being done at that one level right up to the riskiest, this is pretty risky in their eyes. What else? So we see it is a passive managing or index, both large and mid-sized companies in both the developed and emerging markets. Total assets within the ETF, 7.5 billion. And its benchmark that it has is the FTSE All-World Index. As I said, we were going to have a quick look at the price and performance. What do we get on here? We get this chart, which allows us to just have a quick look depending on what time frames you wish to have a look at. And what that then shows you is its performance in rolling time periods, or quick summaries, or quarterly or annually, or as something cumulatively. What you will see here is it really does track how the market, the world market, and surprisingly enough, we are talking about buying the whole world. So why would that surprise us if you are looking at matching how well the world is actually performing? What we are not trying to do with this ETF is beat the market. You are just buying in with a single index fund and trying to match how the market is doing. So when things are going swimmingly well and we are in a bull market, you're going to see good profits. And we see that in 2017, 19 and 21. But what we do see is in those bear markets, we see the kind of dips that we have seen this year to date. What we do actually see in this chart is if you had invested £10,000 or $10,000 as it shows here, it doesn't matter, we're very nearly on level pegging, but whatever currency you put into here is what we are looking at potentially getting as a return. And what this really does show is you should not be sticking money into the stock market unless you are planning on long-term investing, particularly if you're looking at ETFs. So if you were looking at putting in £10,000 and you went to take it out, needed it in a year, potentially at this stage you would have lost approximately £2,000, and then 10 years you have doubled your money. So this is why what we're saying is when you're investing into ETFs and the stock market, you should be looking at long-term vision, and that's certainly how I'm looking at least a horizon of 10 years. So Remember back, can you buy the whole world with basically one ETF? And I suppose, what does this table show us? It is showing us in VWRL, we nearly have the same number of stocks in there as the benchmark, which is the All-World Index. Almost absolutely buys the whole world. What do we sort of get on that whole regional split? So if you were looking to basically buy into the world, VWRL is going to allow you to do that. And what that looks at is about 63% in North America, Europe's about 15%, Pacific is about 11%, and then the emerging markets at about 10.5%. We then break that down, so you remember we had North America was at 63.2. If we go down, 60.4 of that is America. So this is very much weighted towards the American market, and if you think about that, that shouldn't surprise anybody, because we have all of the big tech giants based out of the Americas. You then have Japan, UK, China, etc. Our weighted exposure across different sectors, basically, as you would also expect, tech being in there because you've got that majority sat in the American markets. That is pushing that sort of 21.6% technology sector weighting, and that runs the whole way through all the other different sectors. Is this going to surprise anybody when we then look at the different stocks that we have within the whole portfolio? So on that holding side of things, we have the Apple, Microsofts, Amazon, Teslas, Alphabet all in there. Let's talk about dividends. So I've done a couple of dividends. So I've done dividend stocks and dividend ETFs. You can have a look at those either down below or on one of the cards. But this is just showing you that VWRL, if you want that little bit of income coming from your investments, this is going to give you 2.34%, and that is paid out quarterly. And remember, you get a quarter of that figure, you don't get the whole piece. If you're getting value out of this kind of content, I'd love you to hit the like button and think about subscribing, and actually just stick down below what ETFs are you actually investing in. Depending on whereabouts you are, which platform you use to do your investing, there will be different charges. So for example, if you use Vanguard, you will have that 0.22, plus you will also have a 0.15 cost on there. On Vanguard, you end up having to do either minimum one-off at £500 or the £100 on monthly direct debit. If you want to have a look down below, you could potentially look at getting a reduced price. So you will still have to pay the 0.22% ongoing cost, or so if you want to have a look, I've got Invest Engine down below, and that doesn't charge anything apart from that ongoing cost if you're using a DIY platform. So what is it that I actually like about VWRL? It gives me exposure all around the world, and that really is quite important, because you might find that there are issues happening in parts of the world that will cause their stocks to tank. And what you are doing is, through that diversification, not having all your eggs in one basket, you get that global diversification. Also, because it is all weighted, what you end up with is that, let's call it is almost 90% developed world and 10% in the developing world. I have been talking about different ETFs, and some that are dividend paying ETFs. This actually pays, as you saw, a dividend of 2.34. So if you're also looking at having that little bit of income coming in, that's actually quite a good stable way of doing it, because you're not buying into individual stocks. You are managing to balance this out across a whole portfolio of, what was it, 3,700 odd different stocks. That is massive diversification across almost the whole world. So I did say I have done some other videos on dividend stock investing, be that stocks or ETFs. you can have a look at that playlist, or I'm doing another playlist on other different types of ETFs, so why not go and have a look at that. See you in the next one. Cheers.